So hey, how's everybody doing? First off, let's make a thunderous round of applause for Techweek. This has been awesome. Woo! I really enjoyed speaking to some of you with my panelists yesterday, Al and Andrew, and so I hope I can deliver again for some of you guys and expand on my remarks. I've got two things working against me. One, I've got to follow Craig and Jimmy. And two, it's a bold topic. Creative, determined, and innovative, what it takes to be an entrepreneur. So I'll try to outline for you in the next 20 minutes or so what I think it takes to be an entrepreneur. But as so many of you know, every entrepreneurial journey is really unique and special because there is no textbook answer to this question. My own journey started really early in life and accounts for a lot of the gray hairs that my parents have. And so I had 3 or 4 really defining entrepreneurial experiences of various sorts before starting ContextMedia. The first one started when I was 12, and I was a rambunctious little 12-year-old. I was always asking for things and getting into different adventures. And I remember one day, and it was 1998, the internet was, kind of solidly of age, and becoming popular and inspiring a bunch of euphoria. And I remember my father coming to me and saying, hey, I'd like to invest in some stocks and put some trades in online. And so I was the designated computer kid in my family, and I was going to help him do this. And it looked to me, as soon as I got into helping him, like using numbers and computers to make money, which, to the 12-year-old me sounded like 3 of the coolest things ever, a chance to do something important and meaningful and fun. And so I got obsessed with investing. And I read everything I could get my arms around investing, from the great value investing stuff that really held in my mind to all the technical kind of stuff that was out there. And I ended up discovering that out-of-the-money option contracts, these are just options on stocks or other things that are at strike prices. You don't need to know what that means for this story. These strike prices were out there, so they're thinly traded and around volatility, whether it's a stock split or it's an earnings release or anything unpredictable happens. These things would trade out of sequence. So I wrote a really simple program, but it was back in '98 when there weren't too many programs like this, to actually detect these mispricings. And I started trading them. And I became pretty good at it. So I turned, a little bit of money that I convinced my dad to trust me with into a pretty big sum of money. And it really changed my whole life because it became a lens for me to really understand business and understand, why was it that these prices were moving up and down? Why was it that a company might miss its earnings? Why was it that all these events were happening? And a lot was going on, right? The internet was being created, the world was changing. And so that's how my entrepreneurial journey got started. But I still remember many, many times where I had incomplete information and I had to make decisions. Or, I was up, late into the night as a kid because things had gone really well or really not well, and you had to handle this incredible amount of, emotional volatility with a degree of level-headedness. And it really, in many ways, I think trained me as well as I could have been for startups. So that became a really, great engagement for me. I then ended up starting a company, and this is when I was about to graduate junior high. So, I was still pretty young, and computers, or a very similar time, computers were changing the world. Everybody was interested in computers. They were like, the sexiest thing in the world, and if you had any discretionary income, odds were you wanted to, buy a computer, buy a device, but, something with technology. And people didn't know how to do it. And so we ended up hiring a bunch of, high school students, community college students, a bunch of others like that, to actually go sell technology into homes and work on creating smart homes. And we partnered with a retailer to do this, and then when I was in high school, we ended up selling it off. My senior year then, I had a very different sort of entrepreneurial experience, but it may have been the best thing to happen to me. I left my senior year of high school to go work on a political campaign. I moved to Iowa, and I really learned what entrepreneurship meant then. We would have busloads of volunteers come to our field offices, and we'd have to eyeball them and figure out who was sane and who wasn't, who to put on licking envelopes and stuffing them, and who you could entrust to go knock on doors and canvas and those sorts of things. You have to make all these, again, very quick decisions in a very level-headed way and deal with uncertainty. We often had no idea what resources we would have a week from the day, a month from the day certainly, and you'd have to be very good at working with incomplete information and working through these ups and downs. And then finally, I ended up, after all this, in a circuitous way, dropping out of 2 colleges and starting ContextMedia with some co-founders that I had started on-campus businesses with. And that was also a phenomenal experience because we had to take hundreds of students who were our age and somehow motivate them to work for us. And students are about the most unreliable employee force you could possibly have. Some of you are students that in our businesses, we'd have 25% turnover because a quarter of the college class would graduate, right? We'd lose another 25% because they'd go study abroad or something else. And of course, the rest of the 50% just wouldn't show up half the time. So, making a business work on campus and motivating people who have the same age and pedigree, and especially when you can't pay them too much, made for just a great experience because when we got out to the real world, we now had resources and a bunch of advantages. But, it still was far from easy, so I'll set the stage. It was 2006 when I started our company, so a while back now. And, we had wanted, I had wanted to start a location-based ad network for the year before that. So I first dropped out of school because I thought people were going to be carrying these things around all the time. I was already on this all the time, and I thought this was going to change the world. And I thought, boy, if we could serve advertising and information to consumers based on where they were and what they were doing, right, location being a proxy for it, that would be extraordinarily valuable. And so that was the idea. But this is a long time ago. We were a little early of Apple and everything they did there. And so it made it tough. So I had to go back to college. It was a compromise with my mom. And I'm in there, and I was there 1 full-time quarter. And I met Derek Moeller and Shraddha, my co-founders there. And one night, I wish this was a better story, but one night we were in the library, and we were reading this magazine, The Economist. And there was an article in there about how retailers such as Walmart were installing digital displays in their stores and serving information to consumers based on the aisle they were in, what time of day it was, who they were likely to be, and what they were likely grabbing for. And we thought, what an interesting idea. It had a lot of the merits and virtues of what we wanted to do on mobile with location-based content and promotion. And we thought, what about doing this in healthcare? And healthcare made a lot of sense to us because we had some personal experiences with healthcare. But if you look at the facts in healthcare, 2 things strike out at you. One, 80% of our cost in healthcare is in chronic disease. And chronic diseases are not these, really rare things that you couldn't understand. It's a list of like, a dozen, really, that are almost all of that cost. And if you look at that dozen, in the wide majority of them, we know how to treat them. If somebody has diabetes or somebody has a cholesterol issue, we know exactly what we ought to do. We know what medication to get them on. We know how to test and measure whether that medication is effective. And we know what lifestyle changes to make. And yet we can't do it. We just can't get it done. So it was really a behavior change thing. And we thought, boy, content delivered in context at the point of care might be really effective and much more effective at incremental or marginal life science innovation at getting this thing done. Because the problem isn't really life sciences, it's really behavior change, which is a media or content or technology issue. So that was one part of it. And then the second part of it is you have this incredible density in decision making. So if somebody has a condition, right, let's pick diabetes as an example, they're managing diabetes all year long. And they're either taking insulin or taking medication for it. They're monitoring what they're eating and their blood glucose every single day, maybe every hour. But if you look at their decision making around how they treat that diabetes, right, they're making all of those decisions in about 45 minutes over the course of that entire year. 3, 4, 5, 10-minute interactions with their doctors. So we thought that the idea of location-based content targeted to consumers based on why they were there could be really big. So a lot more went into this, but we dropped out to start this company. I dropped out to start this company. And for the first 3 or 4 years, it was a struggle. I shared with some of you yesterday, we couldn't raise capital. So we ended up bootstrapping a unicorn or a really successful business. But in the first 2 or 3 years, we were constantly on the cliff of really dying, of running out of capital. And, I understand why. It was a 19-year-old who had never sold into healthcare, going to investors and saying, hey, I'm going to take your money and I'm going to go put devices in healthcare and I'm going to convince providers to let me do that. And then I'm going to go sell a bunch of enterprises and convince them to create a new line item and marketing expense because it's going to be better than all of their alternatives. So it was a pretty hard pitch then, and I wasn't successful in raising capital. And so we decided to go at it anyway. And, we encountered a ton of challenges. And I want to share with you, in retrospect, what I wish I knew then. For those of you that are out thinking about creating something or working on something or who are in the midst of your own entrepreneurial journey. And there's 3 or 4 things that seem very intuitive to me now that I look for in entrepreneurs we invest in. I also run a personal venture company and seem intuitive, but I think it would have been really helpful had I been in your shoes then. So I'll go through them. The first is focus, okay? You're going to hear this a lot, but I'll tell you exactly what I think it means. At any point in time, and I think Jimmy said this a little bit earlier, if you talk to 120 advisors, you might get 120 opinions. He's dead on. At any point in time, there are 100 companies to be built in each of your spaces. So whether you're working in healthcare, in education, in logistics, no matter what your industry is, at any point in time, if you were to start from scratch, there are hundreds of businesses that could be created, that could add value to the same set of customers in hundreds of different ways. Your job is to commit to picking one, okay? So when you're starting something, it's actually very easy to bounce around and keep asking people what they think of your idea and looking for validation and feeling good when they say, yeah, I think you're onto something. Right? And then maybe arguing when they don't get it. And it's an endless, really exhausting and tiring cycle. And it's almost entirely not valuable. Because your job is to pick one product that you can sell to a specific type of customer and validate product market fit. And then it's to understand how many more customers there are that will buy that discrete product or service. Does that kind of make some sense? And you see this happen all the time, where you're constantly bouncing around saying, well, if you do this, they might be interested, but then if you do this, they might be interested. If you do this, they might be interested. And they're all probably right. And the key is just to focus and pick one. What are you passionate about building and selling to a specific customer? And go and validate that. It's almost, I would recommend don't talk to anybody unless they're your customer and you're actually trying to sell them what it is you're making. Because that's the only feedback you want, right? There's no feedback for product market fit like actually being able to sell something to your ultimate end user, whether it's getting usage or engagement or it's actually selling something to them. Because you learn a lot of hard lessons that way, okay? You might think that Boeing wants to buy something from you, right? I thought that Pfizer would want to buy something from us in 2007. But the tough thing you realize is there's no one to sell to, right, at Boeing that's responsible for the entire business. You end up having to sell to a specific budget line. And you've got to very specifically make them money or help them save money. And so you pick up all of these insights through very focused engagement around actually selling your specific product. The second, and this is more organizational, is learning to confront. Many of you are going to have founding teams. And it's very easy in the beginning to get excited about what you're going to go do and not have a discussion around who does what. And that works for a period of time. And at some point, you'll start running into each other, right? Maybe it's when you start hiring people. Somebody's got to manage, somebody's got to develop, somebody's got to sell. For years, we really struggled. I struggled particularly at confronting. And I can't tell you enough how the biggest service you can do to your company as a CEO or a leader or a founder is learning early on to confront and hold yourself and your team accountable. That's something that I wish I picked up at the start of my venture. I think it would have made us much more successful early on. And it's critical to prevent you from bouncing around. So, I'll fast forward in our journey a little bit. So now we get some validation. It's 2008. We've got 3 big customers who are using our solution on the life science side. We've got maybe 1,000 or so health systems and hospitals that are starting to look at this or implement it. And we think we're off to the races, okay? We've got over $1 million. Now we've got some investor interest, but, being a little, having some swagger, I say, no, I don't need you investors. We're gonna go do this. I don't like the term sheet. And we start hiring. We scale up to about 18 people. And all of a sudden, in 2008, there's a financial crisis, and our customers who are having good results with our programs are telling us we're going to renew into 2009. So we're going out and creating a lot more distribution and a lot more inventory that we can sell them. And we've got this annual contract that we have for 2008, and we're expecting a renewal into 2009. And 2009 hits, we move into January, and all 3 of them say, hey, I've got a budgetary freeze. They were international companies. I can't renew, but we're going to renew. So just keep going. We're going to renew. And, in the meantime, we're now dwindling our cash reserves. We've got payroll to hit. We've gone out and hired a bunch of people. We're still creating distribution. CapEx is going out the door, and no revenue is coming in. And so this really tested us. This was, the first half of 2009 was probably the toughest experience in my life. We missed a couple payrolls, and we had events where we had to come to work and, talk to our team on Monday and explain to them what issue we had with getting revenue and connect with them in such a way where they worked harder, right, over the next 2 weeks, even though there was a lack of clarity around when the solution would be fixed or what it would take to fix it. And this taught me probably the next 2 things I really think entrepreneurs need. And this is universal, no matter what it is that you're building, right? One is a higher threshold of pain tolerance than the mean population probably has by 100x. Because no matter what it is that you're going to go out and build, you are going to run into roadblocks. And some of them you'll be able to anticipate, and some of them you won't be able to anticipate, and they'll be out of your control. Okay? So you're going to have to just get over a degree of, pain, right, that is going to come at you when you sometimes least expect it. And you've got to be very prepared and intentional about that when you start the entrepreneurial journey. And the second thing is, right, you're going to have to get very used to managing uncertainty. And fortunately, I thought a lot back to my early experiences, trading and in some of these other things where I'd gotten hit by a lot of stuff. And it really helped me, I think, approach these events with a level head. But I remember an event in 2009 where we're out at a conference, we're signing up customers, and one of my co-founders, Derek, calls us and says, "Hey, we're out of money." And we've got to, of course, go back the next day and, manage to convince customers, right, to keep signing up. And we've got to look them in the eye with passion and excitement and enthusiasm to go out and take risk in their organization to sign up with us. Well, we've got, financial uncertainty on our end. And, we often don't talk about this, but so many entrepreneurial journeys are full of these moments. If you're going through a situation like that, you're not alone. It's much more the norm than it isn't. And even in the most high-profile successes that you see, right? On one side, you're convincing an industry to disrupt its practices, change its fundamental structure, and on the other hand, you've got to burn, and you see how hard it is for you to access capital, and there's some pretty prolific examples of that in the last few years. So, managing that uncertainty becomes another thing that I think is critical in the entrepreneurial skill set. So we got over this, and we actually used it as a phenomenal opportunity to remake the organization. And by 2010, we were back on track. And in the last 6 years, really since 2009, we've had over 100% year-on-year revenue growth. We created the line item in life science companies. We went from those first 3 companies, they all renewed, and now 33 of the 35 biggest life science customers are companies are customers. So they said, okay, this works, we're going to buy it. And we had a new challenge, okay? For the last 3 or 4 years, our distribution has run sold out. So anytime we go and get a sale and we go and create inventory, we know it's going to be bought. So we pass that early venture risk that sometimes startups face where they say, hey, we've got a really good idea, but will I be able to make a market? Will I be able to sell something that right now no one's buying, even though I know it's creating return for companies? So we did that. We passed that early venture stage, and then we moved into growth challenges. So this is where we encountered our next set of challenges. How do you scale a company of a dozen, 20, 30 people to hundreds, right? We announced earlier this year we're looking for 600 new people that we want to hire in the next 2 years. Almost every week now, we're onboarding a dozen plus people. And so you've got all these new challenges around how is it that you can be agile, entrepreneurial, really sincere, and hold integrity to your culture, to your values, while you're growing at that pace. And I think there's 2 more lessons here, my final 2 lessons before I go to any questions you have. And one is, as an entrepreneur, as a founder of a company, it's critical that you're able to align your organization, okay? And the way in which you align your organization will change. It'll change as you have thousands of people relative to dozens of people. It just wouldn't make any sense for, you to have a town hall meeting with 12 people, right? It'd look like an episode of The Office. It'd be really funny. But that tactic may make a lot of sense when you've got 250 people, right? And it may make less sense in the same way when you've got 5 offices and 1,000 people, right? So you're going to have to keep changing the plays you call to make these things happen. But whether you've got 5 people or 500, you've got to be able to align the organization. Every single person who's in your organization should know exactly what the picture of your company looks like 1 month from now or 6 months from now or a year from now, depending on your size and stage, whatever time interval is right. And the second thing that I think is just critical is you've got to be able to inject them with more energy, passion, and commitment to results than your competitors. It's one of the competitive advantages all startups have, right? You can visualize a better world if you win. Every one of your stakeholders is better off if you win. And everybody that you recruit needs to really be galvanized by that better world and wake up with more energy and more commitment to results than the competitors are waking up with, right? And being able to fuel that organization with energy and really have that as a competitive advantage is, I think, the final lesson in retrospect as I look back over the last few years that is critical for entrepreneurs to understand. Because it's easy to come to the office and not get that that's part of your job. But your job is to make sure that the 5th person on the team, the 50th person on the team, the 500th person on the team is more valuable in your organization than they would be in another enterprise because they understand what it is that you're trying to make and they care more about it than they would if they weren't in your company. So those are a few of the things that I picked up along the way, often through missteps and failures and struggles, and some out of getting a few right. I hope they've been helpful to you, and happy to take any questions.